Hey, folks, ahead on today's Rebel's Edge, the S&P turns positive on the year. Are the bears confidently in traders' rearview mirror? And not all superheroes wear capes. Super Micro rockets on a Ray J upgrade and news of a Saudi mega deal. And finally, have U.S. consumers committed to getting their house in order after all? Credit card and auto loan debt drops for the first time in a long time. What does that tell us about the strength of the economy? We're going to cover all of that and more in today's Rebel's Edge.
Bang. Welcome back, everybody. That is, of course, Marc LoPresti and not Pete Najarian. Pete is flying into New York and will be on the New York Stock Exchange. But Marc and I are going to bring you Rebel's Edge today, and we're going to kick it right off with the Macro Minute. And in that Macro Minute, we're going to talk a little bit about how desperate China was getting. Now, this is not to throw any shade at China necessarily, but their new loans, Marc, slumped sharply. In fact, the escalating trade tensions had really put a lot of pressure on China. 61% drop in loan demand year over year, which means that either people got a hell of a lot richer in China and they don't need money, or things were pretty damn tough in China and they didn't think they could get any money.
Yeah, well, or any reason to borrow, right? Mm-hmm. I mean, demand for cheap credit facilities tend to come alongside expectation of growth in manufacturing and productivity. Mm-hmm. If you're not expecting growth in productivity and manufacturing, you're not borrowing money to put into your business. And that's exactly what Trump's tariffs did, and that's exactly what brought China to the table. Look, John, as we've said on this and other programs, say what you will, but the tariffs worked. By China's own admission, which you have to take with a grain of salt, if they say it's 10%, it's probably 30%. We saw factories closing. We saw job losses. We saw the largest contraction in Chinese productivity in many, many years ahead of the trade talks. Is a reason why we now have, I understand the details have to be worked out. It's not all done yet. It's not all done and dusted, but there's a reason why we are where we are in the progress with getting China to some form of being a reasonable trade partner.
Well, let's talk about fantastic futures then. Guess we're both going to be all over VIX because the VIX is stable at 1830, folks, down substantially, down 2/3. And then some from its highs that it hit in April. So the fact that the VIX is down and that trader known as 50 Cent was buying a lot of puts just about 10 days ago tells the story as far as stabilization in the markets and a bullish outlook returning to the markets.
Yeah, it certainly does appear to be giving the bulls even greater and smoother runway, smoother air, if you'll take the air travel analogy room. It gives us a lot more confidence. That's why we watch that VIX gauge so carefully. The water feels pretty comfortable here at an 18 handle, John. I'm liking it.
Well, then let's dive into stocks, Marc, because as you said, super micro, super indeed. SMCI, this is one that Marc and I traded very successfully towards the end of 2024 when it was just flushed, thrown out, if you will, baby with the bathwater. But now that Trump has gone to the Middle East and the commander-in-chief has apparently been the seller-in-chief of a lot of tech to the Middle East, Marc, and they are loving the idea of NVIDIA chips as well as what Supermicro can do to hook those chips up in the big data centers of Saudi Arabia and elsewhere in the Middle East.
Yeah, listen, what a difference a quarter or two makes for this company. This was famously embattled question as to whether or not they'd be able to maintain their exchange listing, as to whether or not the alleged or potential irregularities in the company's prior financial statements were going to cause a broader investigation, widespread sell-off. There was, of course, an internal investigation that determined that there were no irregularities. They were able to maintain and meet their listing requirements for the NASDAQ, and it has been a pretty remarkable story since then. Of course, the stock benefiting, as you mentioned, John, from that analyst upgrade over at Raymond James, but perhaps even more of a catalyst is this mega deal from Saudi Arabia for this hyperscale project. This is an unbelievable project for SMCI, and it is part of, we wrote, of course, that very well received Manhattan Project 2.0 research report that we came out with in February of this year. These kinds of deals, we should expect to see more of them. This is part and parcel of President Trump's commitment to making sure that U.S. companies that are in the AI space take and maintain a leadership position. This is a national security issue, and this deal is, I think, just one of many that we will continue to see come out of these trade talks.
Well, then let's also remind people that we had unusual option activity in SMCI, multiple hits, including just yesterday, Marc, when people bought a ton. When we say a ton, how much is a ton? 46,000. Wow. They did it on the 7th of May. They did it at the June 31 strike. Then yesterday, they rolled up to the June 36 strike, 46,000. That's 4.6 million share equivalent, folks. Those are big trades, and they were rewarded bigly, as the president might like to say, Marc, for those investments just made in the last week or as recently as yesterday. All right, let's jump in on the Sony trade here, Marc, because Sony shares were moving higher today after the company announced a big buyback of almost $2 billion. They also had income that was better than expected, although it was down 11% year over year. Nonetheless, the fact that they've got a little more confidence, the fact emphasized by that $2 billion, nearly $2 billion buyback of shares, I think is a very positive thing for Sony and the shareholders, Marc.
Yeah, I mean, listen, anytime you have a share buyback of this magnitude announced, right, it's very simple supply-demand economics, John, right? Less shares out there, the ones remaining in the float tend to go higher. Investors, I think, also warmly receiving news of Sony's plans to spin off not all, but a substantial portion, I think the majority of its 80% or more of its Sony financial unit as being determined to not being core to the longer term growth plans for Sony. So those two things contributing to the positive action in the stock price. I don't know how long this is sustainable, though, of course, because of the other news that came out around this company today. So I would not be chasing this one. I'd be taking profit and moving on.
I think that's great advice. And I would be doing the same, Marc. Now let's shift gears, literally and figuratively, to a self-driving truck company, which is Aurora. AUR is the symbol here. We highlighted it on unusual activity maybe a month ago, Marc, and the stock just jumped, exploded through $5, went to $8 or $9 a share. Pulling back today fairly substantially, even though it's bounced off the bottom. Uber, who has a pretty big stake in Aurora Innovation, decided to sell some of the senior notes that they have to recognize some of the profits generated by those. And that's why I guess shares are a little weaker today.
Yeah, I mean, I was looking around to see if there was any fundamental news on this name, John, that perhaps their competitive position was diminished in some fashion by one of the other driverless car competitors. This, of course, is a space that is just growing massively. You and I, of course, were in LA last week for the Milken Institute and Uncorrelated. And I, for one, was absolutely in awe by by the number of those Waymo driverless cars that we saw all over the streets of LA. I mean, it's like every fourth or fifth car. It used to be every fourth or fifth car was a Tesla in LA, still plenty of Teslas out there. But now it seems like these Waymos, completely driverless cars, are every fourth or fifth car, certainly on the west side of LA, where we spent most of last week. So I didn't see anything to indicate that there was a fundamental reason for this. I think this looks like it was a lot of profit taking on the part of Uber. So we're going to keep this one on the radar.
All right. Well, then let's talk about American Eagle Outfitters, because shares slumped, although not spectacularly so. This is one of those companies, of course, with jeans and outerwear that has a pretty good dependence on what goes on with these trade negotiations, Mark. And they expect revenue to decline about 5%, I guess, is what they're saying. But nonetheless, the stock making, I think, about an 8% decline today. But that's not the end of the world either, because it closed at $12 and some cents last night. It's only $11.94 at mid-session. So this is not exactly let's run for the exits situation here, is it?
Yeah, I mean, it's off the day's lows. And some of what I read, I didn't really like from Schottenstein, basically saying, hey, maybe we didn't inventory manage the right way in anticipation, trying to gauge the tariff situation. And of course, they pulled guidance, John, right? I mean, anytime a company does that, you're going to get slapped. You're going to get sold off. You're going to get sold off 4 or 5%. Not surprised to see that. But here's the bigger issue that I have with this company. Let's be honest. If you do, as I do very often, walk through one of the bigger malls in the tri-state area, be it the Mall of Short Hills or the Mall of America with my teen, the stores that are operated by this company are not the ones that she's running into, okay? These are old brands. These are brands that need to be refreshed. They're brands that need to be revitalized. They are not getting the foot traffic that some of the other hipper brands that appeal to that teenage and that demographic set that they used to. I mean, American Eagle Outfitters, come on, they got to do a better job of getting with the times. So I am bearish on this thing in general. But of course, when you've got a pullback of guidance like this, the market's going to punish you. And that's exactly what's happening right now.
Well, Pete, since he is indeed traveling, Mark, nonetheless, we do have a couple sports stories that we can cover. One of them that is not just a sports story, but we'll get to that second. Let's start off with this one. The Dallas Mavericks were paid $33 million over 3 years for a patch on their uniform. Now I could go into Niedermeyer, a patch on your uniform. Actually, it was a pledge pin. But nonetheless, Mark, when you're looking at this, that little patch that you see there that says Chime, 10 million, let's call it 11 million a year for that patch. I remember, Mark, when people used to name stadiums and pay 20 million for 20 years, $1 million a year for the stadium. And instead, this is the Dallas Mavericks getting 11 million a year just for a patch as they follow along the lines of European football, also known as soccer, with all of their kits, which is what they call their practice or their game uniforms and so forth. All those kits with the patches on them, they make a fortune from those. Now the NBA, and soon I'm sure the NFL, will be doing the exact same thing. This is a pretty big deal, isn't it, Mark?
It really is. And look, it's not just the eyeballs that you get during the game, right, from these patches, which is why some of these European soccer teams, the jerseys, they start to look like a NASCAR wrap, right? That there's so many sponsors on there. It's that when they go and they sell that merch, okay, and again, not to bring my teenage daughter into this again, but she loves those soccer jerseys, whether it's Miami or Milan or Juventus or what have you. And they've got all those sponsor patches on there. And when I'm paying $170 or more for one of those jerseys in those merch stores, it does cross my mind, like, holy cow, I'm actually paying to continue somebody else's advertising here beyond the team itself. So not entirely surprised to see these numbers coming in. We're talking about tens of millions of eyeballs. So kudos to the Mavs. Also, John, the bigger story here, the Chime IPO, so many of the naysayers on some of those four-letter networks saying Trump tariff tantrum IPO market for 2025, dead and gone. Nope. As our loyal watchers will recall, at the beginning of the year, we were tracking at Market Rebellion over 125 VC-backed companies that had announced plans to some degree to go public this year, 2025. We had a little bit of a delayed start because the president had to get this tariff situation and trade balance from imbalance to balance into focus and corrected. But I think we, as this IPO from Chime is evidence, not excluding, by the way, John, of course, our friend Chris Ruddy's unbelievably successful IPO of Newsmax just 1 month ago, that the planes are starting to line up on the runway. I still think we're going to have the IPO window open wide at some point in time this year. This is an indication of that. Congratulations to everybody that got into Chime.
Agreed.
Well, for a pretty fantastic deal here.
I agree. Well, let's wind up, Mark, with something that isn't just sports. It should be a sports story, but it's turned into more of a human interest or a salacious bit of news, which is, of course, Jordan and Mr. Belichick. Jordan Hudson, his girlfriend, 24-year-old girlfriend, has kept him in the news, and so much so, Mark, that people are wondering whether or not he'll even coach at North Carolina, where he is the head coach right now. But there's a lot of betting on these predict markets, whether it's Poly Market or whether it's Clashy or whatever, that maybe he won't even be able to do that because of some of the embarrassing things that have come out ever since his interviews, where she's basically saying he's not going to answer that or whatever. I think overall that the one other interesting thing is, Mark, that he and she, which were at one time like an 85% chance of getting engaged, that's been cut almost in half. The betting markets right now say that's only a 46% chance that they're going to get engaged this year. And I got to think that Mr. Belichick is kind of thinking twice about whether or not he should pull the trigger on this one, Mark, given all the negative press he's got.
Yeah, listen, this is a complicated story, John. This is a sports story. It's a love story. It's tabloid fodder. It's it's a betting story. I don't even know where to begin in terms of commenting on this. I've sort of purposely stayed out of the fray when I've been asked to comment on this particular story. So I'm going to opt for that once again. I'm going to take the balance of my time to do a little bit of shameless promotion.
Let's do it.
First and foremost, today, for 1 solid hour, folks, and it's one that is coming up it'll be at noon Eastern time. You can catch Pete and John from the floor of the New York Stock Exchange on Schwab Network for 1 solid hour. Pretty darn cool. You can catch me Saturday morning, and you know what a morning person I am, Saturday morning, 8 a.m. on Newsmax. They're giving me a little test drive as a weekend morning news anchor. We'll see how that goes. We're going to have to cut back on the Friday night plans if that becomes a regular thing. I'm going to be on Schwab next week, I believe on Monday morning, also at 8 a.m., testing my morning metal with Diane King. And, of course, tomorrow night, there is not a coincidence that what is behind me here is John and Grant. Tomorrow night, we are going to be hosting a live Unusual Options Activity webinar at 7 p.m. with John and Grant Cardone. It's going to be fantastic. If you're watching this, you have very likely gotten an email with a sign-up invitation from us. And then the last one, John, because, of course, there ain't no rest for the wicked. We are fresh off of Milken Institute and Uncorrelated last week here in New York. This week, next week, what are we doing? Well, we're speaking at another conference. Yeah. That's right. Wall Street Conference, Wednesday, the 21st. that is going to be an incredible roster of some pretty famous people that we're going to be on stage with. We'll tease the audience with that and maybe send out an email with more information. But John, that's all I have for today.
Well, that's all interesting stuff. And yeah, definitely, folks, tune in for Marc on Newsmax Saturday and Schwab on Monday. And then we'll both be down at that Wall Street conference with some luminaries. We will be putting out a little teaser on who those luminaries will be at that famous billionaires only, what do they call it?
Billionaires Row.
Davos in Paradise, I think he likes to call it. So we will be putting out information about that, folks. We appreciate all you joining us. We'll be back tomorrow at 1 p.m. Eastern Time.